Hey everyone, this is Mark Treichel with a very short podcast episode for this week, and I'll explain why. A lot going on in the world. I just want to touch on a few hot topics, but I watched Duke collapse against Houston on Saturday. Still a big college basketball fan when it comes down to the Sweet 16, the Final Four in particular. And that reminded me of an old 30 for 30 episode called I Hate Christian Laettner from back when the hatred of Duke in sports. It's kind of people love to hate dynasties, the Red Sox, the Yankees, the Dodgers, et cetera, et cetera. And the fact that Duke had this epic collapse had a lot of the people that like basketball glad to see that Duke can't buy a championship. So that was going on this weekend. Another thing that happens this time of year is it seems like in every family, there's one person who gets to help everybody in the family with taxes. And April 15th is coming up. And so I've been spending a little bit of time helping various folks in my family do some tax planning, doing a little bit for myself as well. And so as a result, I typically might have a podcast or two in the queue that I can get ready for Tuesday's release, but I don't have that here. And with that, there's a lot of other things going on that I'm just going to touch on real quickly. I saw a really cool post on X or Twitter or whatever you want to call it that someone alerted me to. Let me see if I can find it. And it relates to former NCUA board chair Rodney Hood, who is currently acting head of the OCC. And what was put out on the Twitter by a gentleman named Ryan Tracy is that part of our dive into the FDIC race tonight, the jockeying between two acting agency leaders are said to be interested in the FDIC chair. OCC's Rodney Hood has been trotting out policy changes rapid fire, and some Travis Hill supporters perceive a bit of front running. Let's see, first mover in early March, officials from Treasury, OCC, and FDIC were discussing steps to give banks more leeway to engage with digital assets, according to a person familiar with the talks. This issue is a top priority and GOP priority after the Biden administration's draconian tactics led many banks to cut or avoid relationships with crypto businesses. This is not my opinion. This is something off of X. Ahead of the White House summit on March 7th, the person familiar says the administration asked the two banking agencies to hold off on announcing anything because it was considering an executive order on the topic. The OCC, however, issued a press release on the day of the event touting its reaffirmation that crypto activities are permissible in the federal banking system. Some officials, including at Treasury, felt frustrated that the OCC had jumped the gun. This person says the planned executive orders never came, and 2.5 weeks later, the FDIC detailed similar changes. So OCC got it a little bit ahead of it. But there's some conjecture out there that Rodney Hood could be in line for an official seat as at the FDIC, and presumably that would mean as the chair. It's good he knows credit unions. It's just very interesting. Rodney had 2 terms at NCUA, spent a lot of time with him in both those terms, and his passion for life, his excitement, his energy is unmatched by anyone I've ever spent that much time with. So that, I think, would be a positive thing in the financial arena and very interesting. The second thing is Jim Nussle announced his retirement. He did not, from America's credit unions, he did not pick a date because he doesn't want to lose focus from all the important things that are out there as far as not getting regulators combined and not getting credit unions taxed. I had heard a rumor that this was out there during GAC, but he didn't want that announcement to be made at GAC, that the people in the know knew that this was coming, but they didn't want that to steal the thunder of the importance of staying focused on the issues at hand, which are maintaining autonomy of NCUA and maintaining tax exempt status. But it'll be very interesting to see how that plays out. Will it be somebody at America's credit unions that takes over? Will they go get a heavy hitter, former senator, or what have you? So that'll be fun to watch as well. And here we sit. I'm recording this on Monday, the 7th of April. The markets took a beating last week. I heard some folks and saw some folks on LinkedIn talking about the flight to quality and remember your credit unions during a flight to quality, which can be a good thing, but it can also dip your capital ratios if you find yourself close to some triggers, whether that's the leverage ratio for risk-based capital or whether that's well capitalized and you're trying to stay out of needing to file earnings retentions, or whether you're filing earnings retentions and you don't want big growth that could trigger you to have a capital net worth restoration plan. If you're on the cusp of one of those breaking points, a flight to quality could be a little bit of havoc, but net, I think that would be a good thing for credit unions. Three other things. NCUA has offered their buyouts to their staff, from what I understand, having talked to some folks that are contemplating doing what was offered. I think there is quite a different bit of predictions on what might happen here. The numbers that hopefully people are hoping will happen versus what will happen. The reality is, when you offer those, the people that take them are the ones who were always going to retire. Because if you offer somebody $50,000 to retire early, but they didn't want to, they have to go find other employment. $50,000 will buy you a Toyota Camry, not much more. And the reality is, I don't think those things are going to entice anybody other than those folks that were already thinking about retiring. But when there is a big increase in retirements at NCUA, that's going to make your exams a little bit tougher, because odds are they'll lose more experienced people as opposed to less experienced. That'll create opportunities for those down the line. But as well as things are slow at NCUA exam-wise. This will just make them slower. This will make bank acquisition slower. This will make merger applications slower, et cetera, et cetera. So short term, there should be some pain around this, with the goal of theoretically saving some money, but the purge of the corporate knowledge, I think, will be worse than the saving of the money, because the money will be spent next year or the year after anyway. So I think it's much ado about nothing as far as actually having net gains from these changes, but it does show that they're making efforts to comply with what Trump wants, the Trump administration. That is, I've talked a lot here about Kyle Huttman only having one Republican vote, and that there are two Ds that control the swing. The reality is, Todd Harper basically is the swing vote. He has a lot of clout because of his understanding of having been at NCUA for so long. And if there are going to be 2-1 votes instead of 3-0 votes, Todd he's left, but he understands the concept of being in the middle and getting things. So I think he's going to be, if you like to watch Survivor, he's the swing vote. In Survivor, sometimes you have 3 different tribes that come together, and you got 2 people that came from this tribe, 2 people that came from this tribe, and there's one that's in the middle, and that's the person they're lobbying. In this instance, the person that I believe Hauptman goes to is Harper, and whatever deals get done will be that, and only deals will get done that Harper wants to get done. So while he's no longer chair, he still has, in my opinion, the most powerful seat of the 3. Lastly, I think I want to touch on leveraging as it relates to sub debt. NCUA sometimes gets wrapped around the axle on leveraging of a balance sheet with subordinated debt. In my opinion, if you are a code 1 or a code 2, you should automatically get subordinated debt if you apply for it. If you're a code 3 and it can reduce the risk of the insurance fund, you should automatically get approved for it. And sometimes NCUA views this word of leverage as being bad. Here's the reality in my mind. You have your reserves, which are your reserves, which you own. Every other source of deposit is leverage, whether it's shares, whether it's share certificates, whether it's money markets, whether it's brokered CDs, whether it's borrowings at the Federal Home Loan Bank, or whether it's subordinated debt, which reduces the risk to the fund because that subordinated debt takes the first loss in any loss scenario. I struggle to see why NCUA is, in my mind, far too restrictive when applications come in for subordinated debt. To me, subordinated debt, the belief should be that it's going to be approved unless there's something material that should stop it. And that's just not the reality in some places in the agency. And there has been progress made since long ago. Since rates have gone up, I've seen some weird queries and some weird questions at NCUA that I just hope that discussions by the credit unions or reapplications can lead to some better decisions in that arena. I think that's pretty much it. The baseball season is off and running. My Twins are again not doing well. It's close to NBA basketball season. I'm hoping the Timberwolves can get the 6th slot in the West or higher. And again, just a few hot topics on credit unions. I'll be back with a more detailed podcast next Tuesday. And let's see, tonight we've got Houston and Florida in the championship. By the time this runs tomorrow, one of those two will have won. I'm rooting for Houston because of the connection to Phi Slamma Jamma, Hakeem Olajuwon, Clyde Drexler, and a few other NBA stars from back in the 80s that never got their championship. Here's to hoping that Houston can get their first national championship tonight. This is Mark Treichel signing off with Flying Colors. I hope you'll join me again next week.